property investment is very tough right now. And if you're anything like me and you got a lot of houses, there's some of my properties that were making me nice money. I was making a couple £100 a month. Now I'm losing money on. And it's the Bank of England's fault.
Welcome back to the channel, guys. My name is Warren. I am a banker here in London and a property investor across the UK. My goal is to live free and independently from property. So I'm looking for an income of £3,000 per month from property. If that's what you want to, like, subscribe. That is what my content is all about. So guys, today we are looking at Mr. Samuel Leeds. I haven't watched this video, but it was titled Landlord Guru Panics at Mortgage Rate Rises. We're living in an environment now of rising mortgage rates across the housing market industry and rising interest rates across the economy. So it's a very timely video. Anything with Samuel Leeds in it is going to be good value. The guy is very controversial. I am neutral on him, right? When I was looking into the rent-to-rent strategy, I watched a lot of his videos. Never paid for one of his courses though. That could never be me. But the guy is a great salesman and some of what he says is really interesting. I know there's some beef, property industry beef, if that's a term, going on between him and Vanessa Warwick from Property Tribes. But that's by the by. Let's get straight into this video and see what it's all about, and I'm going to react in real time.
Around 18 months ago, the base rate of interest was 0.5%. And that's the interest rate at which the Bank of England lends money to private banks. A low base rate from the BOE means low interest rates are offered by banks to the consumer. So when the base rate goes up, banks' interest rates on mortgage products, loans, and apparently savings do too, at least in theory. The base rate is now at 5%, and it's widely understood this could rise to as high as 7% by early next year. So, as a result, mortgage rates have now reached a 15-year high. Yep, they're now even higher than after the quasi-Kwarteng mini-budget during the short-lived premiership of Liz Truss. The average two-year fixed mortgage rose to 6.66% today, exceeding the 6.65% they hit on October 20th, according to Moneyfacts, a financial data analyst. Mortgage rates have risen rapidly since mid-May, and over the past 2 months, average monthly repayments have risen by £167 a month or £2,004 a year on a typical...
And yeah, if you know anyone, if you yourself have a mortgage, or you know anyone paying off a mortgage, you know that these are tough times for everyone who has either a variable rate or a fixed rate that's coming up for renewal. It's something going on across the nation, not just in the UK, but the whole of Europe. A lot of people are struggling because typically mortgage repayments are one of the biggest monthly expenses for most people. And there's also the equivalent going on with rents because, of course, if a landlord's mortgages are going up, they're very likely to be increasing the rents that they charge to cover the cost of that. So, peak right now.
So according to Mr. Gammon, we could be over the worst of it by the end of this year. Personally, I wouldn't bet my house on that, which is what some people are literally doing. One person who is really panicking is property tycoon Samuel Leeds. Here's Mr. Leeds last year when the going was a little bit easier in the property game.
I work in London, I live in Buckinghamshire, but I invest up north. Right now we're in Huddersfield. This is Huddersfield. You buy a house here for like £80,000, you're going to rent it for £600. In London, you'll buy a house for £800,000. You're not going to rent it for 10 times the price. So you want to buy low, rent high, with a property manager nearby. People say, oh, but Samuel, I have to buy close to where I live so that I can keep an eye on it if there's any problems. That's not financial freedom. That's called a rope around your neck. You want to buy properties in cheap areas, you want to rent them high, and you want to have systems in place and property managers that can make it passive income so that you can have financial freedom. That's called property investing the smart way.
Look, that is great advice. That is exactly what I do. So you can't say this is bad or terrible advice just because it's Samuel Leeds saying it. That is literally my strategy. He said nothing wrong there. Let's see what this guy reacts with.
And here's Mr. Leeds explicitly talking about the kinds of system he means.
If you've got 50 grand, buy a house, but buy a house that is run down. Buy the worst house in the best street. So instead of buying a house for 200 grand that's in perfect, pristine condition and renting it out, find a house in the same street that's really run down that needs 50 grand spending on it. It's got structural problems. It's a mess, but buy it for 100 grand. Buy it cash. If you haven't got cash, you get a bridging loan. It doesn't need to be your cash. Buy it for 100 grand. Then spend 50 grand at doing it up. Doesn't have to be your money. You can get a bridging loan. I've got my own bridging company because a lot of people say, oh, how do you get bridging now? So I set my own company up. There you go, I can give you bridging, right?
Yeah, it makes sense. If you've got the demand there, why not service?
Again, so far, nothing wrong with that advice. He's really talking about the BRRR strategy. I've done that in Salford, Manchester. Check out my video that I did on that. But again, good advice.
Right, so now you bought a house for 100 grand, you spent 50 grand on it, but now it's worth 200 grand because you've added value. So now what you do is you now refinance it, get a 75% mortgage loan to value, and they'll give you 75% of the new value. So instead of getting a mortgage before you buy, get a mortgage after you buy. So they'll give you 150 grand, which pays back you get your 50 grand back, and you can pay the bridging company back, and then you go again.
So it's recycling money.
Correct.
Yeah.
Correct.
Yeah, that makes sense.
And that is how most wealthy people do property.
What is going up with his accent, by the way? He sounds like James Corden. I mean, it sounds like he's got some weird mid-Atlantic twang because he's trying to appeal to US audience as well. That's our theory here anyway at Novara Media. What goes up invariably comes down, however. I'm sure your parents told you that as a kid, and guess what? They were right. Rising rates have left our TikTok property oracle in a sticky situation.
I mean, so far, he hasn't actually provided any critique of what Sam said in those first two clips. Just some ad hominem lame attacks on the way he talks. And again, I am not a Samuel Leeds defender. If anything, I am more on the side of caution when it comes to Samuel Leeds' content and advice. But so far, he's chatted nothing but wisdom and good tips. But let's see what Sam says in this clip and see what this guy has to say about it. Because so far, no faults really with Samuel.
England are absolutely destroying and killing the property market right now. The housing market is on its knees. Property investment is very tough right now. And if you're anything like me and you got a lot of houses, there's some of my properties that were making me nice money. I was making a couple £100 a month. Now I'm losing money on. And it's the Bank of England's fault. So base rate going up has screwed us all. The money loaned out from the big banks like the Bank of England to the smaller banks, it's gone up. It was 0.1%. Base rate keeps going up and up and up. It's now 4%. What that means is that when you're getting money like a normal loan, a mortgage from, say, Lloyd's Bank, from Halifax, you're borrowing money that's borrowed. So they borrowed it to lend it you. Now, they were borrowing it at 0.1%. Now they're borrowing it at 4%. So how much are they going to charge you? 5%, 6%, 7%. We had properties, didn't we, Amanda? How much? We were paying like, what, £300-400 a month? Now what we're paying?
600.
600. And what's the rent? 500. Right. So we were paying 300 on the interest because base rate was low, interest rates were low. Now we're paying 600. The rent's only 500. What does that mean? That means that the property sucks now. Now it's not an asset, it's a liability. Sorry, it's gone a little bit dark now. It's doom and gloom message. I think that's why. So what's happening now is people can't afford to buy houses. And the reason they can't afford to buy houses is because the interest rate's going to be so high, the rent's not going to cover the mortgage payments.
It's a funny old world, isn't it? This guy was walking around, swanning around like a new age alchemist, creating money from seemingly nothing. And he thought he'd found a secret sauce, but it was all only possible because of historically cheap interest rates. He's saying he's got lots of houses. Well, as interest rates go up, he's actually got lots of debt. James, are we...
Okay, so first of all, you got to understand about Samuel Leeds is that he is a hype man. I said he's a good salesman. So in his content, he's typically very animated. He's shouting, he's lunging into the camera, right? That's just his personality. That's his caricature, for want of a better word, right? So back to the actual critique. So this guy on screen now, he's criticizing Samuel for basically getting into property when the market was good and now saying that the market is not so good from a financial mortgage perspective. Dude, every single landlord across the country, me included, are saying that. It's got nothing to do with Samuel Leeds or him having a bad strategy or property investment being a bad asset class. It's just the way the economy has gone. So if you're going to make this video about Samuel Leeds, you've got to make it about every other landlord in the country because we're all having the same issues and the same problem. My profits personally are being squeezed by the rise in interest rates. I'm on a variable mortgage for one of my properties and it's decreasing. It's squeezing the profit month to month. But, you know, that's just the way the economy is. This happens throughout history. So I don't quite get what this guy's point is yet. So maybe he's coming to an actual meaningful, useful point. I don't know. Let's see.
Looking at the demise of the TikTok landlord.
Quite possible. Sorry, I was just chuckling at the little detail of him having to open his car door to get the light to come back on again. But I think in his case, look, this is kind of kind of serious what's going on here. And I'll try and put it in some sort of, just to get a sense of like the scale of landlordism in Britain. We all know there's lots of students, right? There's half of 18-year-olds go to university, 2.3 million students in Britain. There are 2.7 million landlords, right? There are more landlords in Britain than there are students now. And that's mostly buy-to-let, where someone who owns one house gets another house. And as he was just describing, the margins on that can be really, really tight. The slightest move in interest.
By the way, 2.7 million, there's like 67 million people in the UK. So to say that there's more landlords than students is meaningless. There's more landlords than nurses. There's more landlords than doctors. There's more landlords than the population of Liverpool and Manchester combined. What's the point? Yeah, I don't get what the point of that soundbite is. And by the way, in terms of percentages, that's around about 3% of the whole population. So the other 97% of the UK are not landlords. But again, I'm still waiting for the meaningful point that this video is coming to.
Interest rates, and suddenly people are squeezed. And they go from having this nice asset that seems to give them money forever with no real effort, financial freedom as he calls it, right? To suddenly you're losing money and you're really stuffed.
I have to pause again. I don't think any landlord on earth will ever say that buying a property, investing in a property is an asset that gives you money for life and never goes wrong. That's just not true. Investing in property is very similar to investing in the stock market, crypto, gold, whatever the asset is. It has periods when it's up and periods when it's down. The property market is cyclical, like any other market, right? I can't think of one market that just does that and goes up all the time over life. So either these guys don't know much about assets and markets and economics, or maybe they have some sort of agenda against Samuel Leeds and maybe landlords as well, as a lot of these media type channels do. But again, let's see how their point develops.
And what should concern us is what happens to politics. What happens to the politics of these people when the world looks like that? Because he's going, it's the Bank of England's fault. That middle interview you played, there's a whole discussion there about the role of the World Economic Forum and elites who are behind the government and who are steering things. I think all of this can land in a really ugly direction if we're not quite careful about this. This is one of the reasons why I think it's quite important for anybody on the left to have a progressive critique of what's actually going on with the Bank of England, with the financial system, with how the economy is progressing, and start to challenge what I strongly suspect is going to be some unpleasant conspiratorial thinking from the radical right around the questions of what's going on with our financial system, what's going on with interest rates, why am I losing out?
Guys, I have no idea what the point of this video was. Let me know in the comment section below if you do, because like I said, the first half of that was Samuel giving really good advice about what type of assets to buy in, buying in the north, buying cheap, having high rents, doing the BRRR method, all good stuff. Then he went on to say, look, it's tough times out here, right? The Bank of England is raising interest rates. As landlords, we are struggling, which is what the 2.7 million, because that's a really significant number, of landlords in the UK are saying as well. No issues there. And then they've ended by saying, oh, politics, the left. We're getting into conspiratorial theories against the Bank of England and world economics. A mess, guys. I have no idea what the point of this critique was. Made for an interesting video, but I think it kind of links into a wider point. Let me try and bring this home, guys. I think what you see in the media a lot is demonization of landlords. I do think generally in the media, there seems to be this anti-landlord sentiment just generally across media. And this is a good example. Samuel Leeds is an easy target to pick because he's very prominent. He's one of the most recognizable faces in property out there, and they've just chosen him and made some random video about him. But, that is my thesis and that's my conclusion based on watching this video. They've given no real value or any real meaningful points at all. Let me know what you think, guys. Thanks as always for supporting the channel and watching. I really appreciate you all. Like and subscribe. Share this video with somebody who you think might find it useful or entertaining. And I'll see you guys in the next one.